This video is going to be about the last daily buys you need to watch. Now it's going to be really simple, really quick, to the point. So let's waste no time. How does the market move? Okay, let's just cover the basics here. So how does the market move? Two ways. Either we are reaching for highs and lows, or we are reaching for imbalances in the market, other known as ERL, external range liquidity, and IRL, internal range. Now, what does this mean? This means, okay, we don't need a line like that. This will look something like this. Do some drawing, bang, bang, bang. Yeah, it's going to be really straight to the point. So we're either drawing to old highs or lows. This is IRL, and then IRL here. We're either drawing to internal range liquidity. So this is it. This is how the market moves. At the bottom and top of this will be IRL. So this will be IRL here, and at the bottom right here would be some sort of ERL that we've taken. I know this drawing's a bit, but you get what I'm trying to say. All the market does is move from ERL to IRL and IRL to ERL. So if we know this, we can use this on the higher time frame. I know this is such an ugly drawing, but just let me cook. That's better. So if we know this, if we're drawing for lows or highs, or we're drawing for internal range liquidity, how can we form a daily bias? What can we use? Daily time frame. If we want to know where the daily candle is heading, we use daily time frame without ERL concept and formulate bias. Simple as that. Now ICT also states that unless it is very obvious and it's obvious where we're going, then it's not impossible to trade, but it is lower probability. So you want to have a clear draw on liquidity on where price is likely to head on the daily time frame using ERL and IRL concepts. So if we use the same logic from today, and this is what the video that I just posted that's going to premiere was supposed to be, but I kind of yapped for 45 minutes. So this is what it is. It's using the same logic, okay? The drawings look a bit mad now, but same logic, right? What have we got right here? Taking out ERL. Where are we going to move? What have we got? IRL. What do we do? Take out ERL. Friday forms the IRL. And what do we do for Monday? We cell up inside of this wick and we draw to here. As you can see, it's an open high, and then we cell to this target. Same thing here, right? Obviously, take out here. This doesn't get traded to. However, you would then adjust and use the lower time frame, as in the 4 hour and hourly. But then the same logic is applied here. What do we do? Take out ERL. What have we got below? IRL. Tuesday we don't tap it, but we could have sold into it and used a fractal model. What have we also got here? Bang. So ERL formed, and then Tuesday we can sell off into the IRL with the logic of ERL to IRL. So Wednesday, same logic. We didn't tap this one down here, we made equal lows. So on a lower time frame, this would look like clear equal lows. What do? Open, sell off into it. That's the daily objective. And then we start retracing. Where do we start retracing to? Well, IRL to ERL. It's that simple. Really is that simple. So you can use the 4 hour and the hourly for like days where we don't have, like this day, obviously we'd have a gap down here, but we don't even have a lower wick. So on the 4 hour, the hourly, you can then adjust your bias. Obviously this is all-time high trading, so it's not as high probability, but you can use the same logic anywhere, because this is how the market works. This is how I formulated bias for today. And this wasn't just how I formulated a bias, but the main draw looking at Asian session open was that we took out ERL and we was likely to draw on the Monday to this IRL. Now, I covered in the last video towards the end that my bias would then have to shift from the daily to the 4 hour. Obviously we're still in the IRL, however we did inverse it, but likely that we do go from IRL to ERL is doable. But because the daily is kind of unclear, it's already been taken, there's no more IRL to be taken, the next draw would obviously be ERL, and I was looking at this gap here that we already tapped into to potentially see longs up to here as the fractal buy model, here prominent high, and then obviously ultimately here. But what we covered was that if price wants to come for these highs, we're not going to move in a straight line, we're going to move in retracements. So we're going to come to this one. If we want to go to this high, we then have to go down, which we do. If we want to come back up here, we have to move down first. So if we come to this high and we've still got to draw on liquidity higher, we're not going to move in a straight line. We're then going to get a move lower to then come up. Then we're not going to move in a straight line. We're then going to come lower to come up. And then what are these moves? IRL and IRL. So ERL, IRL, everywhere. Everything is IRL, ERL. ERL taken, IRL. ERL taken, ERL taken, IRL. And then when we get up here, yeah. So that is the bias coming into the following day, Tuesday. Looks like we're buying off of it. The fractal buys would obviously be here, as because we know that we don't move in a straight line, this gap isn't going to take us all the way up here. It may be the start, but this gap isn't just going to send price higher. We could then see something like this. So we come into here, move up, then we come back down. There's probably a gap here on the M15 or 5, and then we're moving to this high. So it is all fractal. Everything is fractal. So yes, it's really that simple. We'll actually dive into this, and there is, look, so as you can see, we dip into this low. If we want to come to this high, we must go lower first. What do? We come into IRL, and where are we drawing towards? These equal highs. So then once we take out these equal highs, what would we then look for? Probably something like this, maybe some IRL inside, then move. Everything is IRL, ERL. No matter how you want to argue with it, it is the case. So yeah, these equal highs are really juicy. I will put an alert on that. Not like I need to, because I know that it will get up there. But yeah, you want to use the logic of ERL, IRL on the daily, and if there isn't clear on the daily, you want to use the 4-hour and the hourly. But ideally, the daily is best. You want to come into the market looking at the daily time frame. If there's a clear reason for price to move, like on Monday, we had a gap below after taking ERL, we should really short into that gap. And as soon as we do, you don't touch price. It doesn't matter then. I will reference one quote from ICT, which is, it should be in here. If you can't determine the mark in the room, you are the mark. If you can't determine the next liquidity, you'll be the next cleared. Liquidity cleared next. Same thing here. When I set my screens, first thing I determine is if there is a daily time frame narrative, meaning is there a reason for price to drop? Just like today, we had a gap after taking ERL. There was a price to drop, so that was a really good short bias. It must show its hand in one strong-sided narrative, or my trades will be less probable, but not impossible. And this is where he mentions the 4-hour and the hourly with the same logic. So yeah, it is literally it. I'm going to give you one last example. Coming into Monday, okay, which is what marked midnight. Well, it actually happens at Asia, but this is Sunday's open, okay. If, okay, and because for us it's fractal, this gap is technically also sell side liquidity because it's a low, right? If we are drawing to this low, are we going to move in a straight line? Sunday opens, are we just going to move down? No. So what do? This is our draw on liquidity, okay? We're going to put a line there. If our draw on liquidity is here, we're not going to move straight to it. What do? We come up, then go down. Now, what do we come up into? IRL. It's really that simple. And then same here. We obviously come up into here. We're not just going to move straight down. As you can see, this comes back in. We then use this turtle soup, internal. So if we've taken out external liquidity, where would we sell to? Gap. Once we've taken out here, what we're going to sell to? A gap. So we move from internal to external, and then external to internal, you know? So, and also this sell side is internal, so external to internal, it's all the same. But yeah, drawn liquidity is lower. We're not just going to move straight to the low. We're going to come up to IRL, then sell off. But we're not going to do it in a straight line. No. We're going to move in retracements, because you already know that. But just train your eye to see that this is how the market moves. It looks like we may even hit TP, well, not TP, but we may even come up here. So let's just have a look if there was a trade set up here. So obviously internal liquidity would be looking for external range liquidity, but we're not going to move in a straight line, are we? So look, we come up into internal liquidity. What do we target? External liquidity. Okay, not making this up. External liquidity. Then if we've still got a higher time frame draw on liquidity higher, where are we going to move to? Okay, we're not going to just move straight up. What do we come into? IRL. And then where are we going to move to? ERL. And this is where you get your high probability setups. Just like this. This is a breaker. And this is just on the 5-minute time frame. Breaker, gap. That's your unicorn model right there. It's really simple. But even here, look, if we're drawing towards this internal range liquidity after taking out external range liquidity, are we just going to move in a straight line down? No, we're not. So what we're going to do? Come down. We almost get to the target. And then what do? Well, we took out external range liquidity. What do we then do? Move up into internal range liquidity. And what do we then do? External range liquidity. But within a higher time frame. So technically the higher time frame is moving from internal to external. But because this is internal, you could then be targeting this as your partial. And what do we then do after taking this partial? Do we move up in a straight line? No. What do? External to internal. Where do we then move from internal? External. Where do we then move from external? Internal. Where do we then move from I can do this every candle, every movement, any time frame. And I guarantee you could see the same on everything, every single thing. So this is how you trade a line with order flow. This is your low risk buy. And then this is even your higher probable buy. But everything is fractal. Even if you just looked at this 5-minute internal, meaning we're going to sell off to external, where could we then buy to? I'm getting tired because it's so repetitive. Bang. What do we then do after taking external liquidity? We move to internal liquidity, which I already showed you, the 5-minute time frame. Here. Even just disregarding the higher time frame IRL, we took out this low. Where are we going to go to after taking out this low? Well, we could go to internal gap. We can go to this internal gap. And what do we do after taking out this internal gap? Well, I know it's fractal and it's a bit of a rate for some people that don't understand, because obviously you can definitely trade what? Look at this R. If I just took a trade there, stop, just targeted from external to internal, it's 2R. We don't even need to hold for everything else. Obviously higher time frame would allow us to hold for at least this high, because internal to external, that's your easy low hanging. But then it's allowing us to just capture bigger moves because we're aligning with the higher time frame. Everything is higher time frame. I really wanted it to come and hit whilst I'm talking, but yeah, I didn't want to make this too long. Hopefully it's not too long, but I'm yeah, I'm gonna post it. I wanted it to be 10 minutes, but you can't do it in 10 minutes. But yeah, ideally we see this probably hit before by 9:10. Yeah, just because that's macro. But yeah, this is the draw liquidity for this current trade we're just in. But yeah, I'll see you guys in a bit, and yeah, peace.